Hello, everyone. You're welcome to the Stock Exchange Masterclass with Akpali Joel. I'm also known as the Pointer. All right, I congratulate you guys for this big leap. I think it's a big leap. It's a very, very big leap. It's for some the beginning of your investment journey, while for others it's a continuation or an expansion of knowledge. All right, so I welcome you. I congratulate you. This will actually be a fruitful course. All right, so let's dive right into it. Let's begin. I hope you have your jotter, you have your pen, because some of the things that I'm going to be explaining, some are not noted here, so you might want to have your paper and your jotter and your pen. All right, so let's go into it. We'll start with looking at business and investment. Business and investment. These are the most important things that you will have to consider when it has to do with wealth creation. If you intend to be wealthy, you cannot ignore business, you can't ignore investment. There's literally no way you can ignore these guys and become wealthy unless you want to. Let me not go into that. All right, so business and investment. Okay, what I wanted to say is unless you want to be a criminal, that's it. But you can't ignore business, you can't ignore investment. Even a criminal is looking for where to actually invest his money, because he can't be stealing all his life. All right, so very, very important. Take note. You can't ignore business. You can't ignore investment. Is that okay? So let's take a look at some facts about business. All right. It involves the buying and selling of a product. All right. So you buy a product and then you resell. This is business. Whatever is in between the buying price and the selling price is your profit, and then you make your profit good. All right. Now, another thing about business is that you must work hard or you must work smart to make money. So in business, you're actively working, you are engaging, you are buying, you are selling. All right. It involves you. It involves your active participation. All right. Just like number 3 says, you have to be actively working for money. So you are working to make money when it has to do with business. You have to be working to make money. It's either you are working or somebody else is working for you. It's almost the same thing, but you are actively participating. All right. Because you have to actually check and balance with the person who's actually working for you, so you are actively participating. All right, so let's look at some fact about that's about business. All right, very, very important. You can't ignore it when you want to create wealth. If you have any intention whatsoever to create wealth, you can't ignore business. All right, so let's look at investment. I hope I'm not fast. I hope I'm not too fast. I just want to run through this before we enter into the big deals. All right, so let's go. Let's look at fact about investment. You are simply sending your money on an errand to work for you. That's the first point under the facts about investment. You are sending your money on an errand to work for you. When we were young, most of the time, the elderly ones actually send us on errands, and then we go and then buy whatever we want. They sent us to buy and then return. The heat of the sun, we are the one that felt it. So whatever we encountered on the road, when let's assume we got to the place and then there was no change, we had to wait and stuff like that. They are at home, they didn't feel that. So they were actually less concerned about what happened. Their point of emphasis is just that we will go and come back and give them what they want. So this is exactly what investment is. This is exactly what investment. You are sending your money on an errand. You are sending your money on an errand to actually work for you. So you are not working for your money as in the case of business. Your money is working for you. Your money is working for you. This is why investment is very, very important. So investment doesn't need your active participation. All right, let's look at number 2. You don't have to do any work once you invested. Once you've invested, you don't have to, you have no business whatsoever. Your goal is let there be return. Just like when we were young, that they used to give us errands, give us message to actually deliver. The business is what actually, what is the turn up, what happens after, what actually happened, that, how will I put it now? There's the way I want to put it that is actually eluding me. All right, so what is the return, what is the reply, what happened, how did you go about it? Come and give us feedback. Exactly. So what's the feedback? That's the word I'm looking for. Thank you so much. What's the feedback? What's the feedback? All right, so you are sending your money is actively working for you, and then you are expecting feedback. You are expecting feedback. All right, once you've invested, you don't have to do any work. It's just like you're sleeping and your money is working for you. I believe you've heard that statement. People sleeping and their money working for them. It is investment. It is investment. All right, so let's go to the third point. Your money is making more money for you. Your money is making more money for you. Now, this is very strategic because you don't have to actually be involved. All you have to do is just to have money. So I often teach that the first step towards investment is not actually savings, is income. Is income. So you need to be doing something that is bringing you income. Yes, I often teach that. You need to be doing something that is bringing you income. If there is nothing like that, you will struggle. I'm telling you, because if there's no income, there's literally no way for you to actually save or for you to actually invest. All right. So you need to have money first before you talk of investment, and the money has to be consistent, like maybe monthly, maybe daily, maybe weekly. All right, depend on your income strategy. All right, so there has to be income first. All right, so you can actually save a portion of your income and then invest it. All right, so your money is actually making more money for you. Is that okay? I think that's all about investment. So let's take a look at some few types of investment. Listen and listen good. These are not the only types of investment. Oh. There are so many more type of investments, but these are the few. The reason why I listed this is because I am actively involved in any of these three. I listed this because they are easily hand reach, like we can easily reach them all around us. They are common. They are almost everywhere. All right. The first one being real estate. You can literally understand the idea and the concept of real estate. All right. The buying and selling of lands, rentage of houses. It just has to do with apartments and buildings and properties and stuff like that. Are you there? So basically, the idea of real estate is easy and comprehensible. All right. So the next one is forex or crypto trading. You must have heard of trading. Yes, there's a plethora of funds. There's a lot of funds in trading, but the risk is so high. High risk, and high risk also entails high return. All right. So we must have heard of trading, forex trading, crypto trading, futures trading, derivatives, and stuff like that. So the last one, which is the third one, which is basically what we are looking at, is the stock exchange. Yes, the stock exchange. The stock exchange, which involves the buying and selling of shares. All right. So basically, we'll be doing the explanation. All right. So let's go ahead. Let's go ahead. Let's look at some facts about the stock exchange. All right. Some facts. Now, the stock exchange, remember, it's a type of investment. Good. Now, some facts about the stock. Sorry, some facts about the stock exchange. First of all, as of now, well, at the time where the stock exchange was, where when it began, it was a terrible process. It was a terrible process. You had to go to your bank, go through a broker. Of course, now we still go through a broker, but the entire process is so easy. That's why I can bring it to you like this and say I want to teach you about the stock exchange. All right. So the entire stuff is easy. The process is easy now. It's understandable. Everybody can do it from the comfort of their home. And the first and primary fact that I listed here is that it requires very little capital requirements. As low as 1,000 naira, you can become a shareholder in. Is it any company? Yes, in any company of your choice, any Nigerian company of your choice. As low as 1,000 naira, you can become a shareholder. All right. So let's look at the next point. You don't need to know everything to start. You don't need to know everything to start. Remember, we said the stock exchange is under the types of investment that we listed. So this is investment. And you don't need to know everything before you start. You just need to know not even all what I'm teaching. You just need to know some of what I'm teaching. But I'm teaching you all so that you will just pick crucial ones and then begin to put them into practice. As you begin to put them into practice, your knowledge begins to expand. So you don't need to know everything to start. All right. In fact, if you don't know anything now, it's it's okay. That's why I'm actually here. That's why I'm sharing this with you. All right. So the third point is it involves very low risk and very high reward. All right. Very low risk and very high reward. Now, it's often said that low risk, low reward, high risk, high reward, which is absolutely true. But chances are excellent, not in all cases, that in the stock exchange you can also get high rewards. The stock exchange is a low risk investment. Is a low risk investment and most times a low risk reward. But there are times where you can get high risk reward depending on your analysis of a particular company, which is one of the most important thing I'll be teaching in this class. Is that okay? So let's go further. You can easily monitor it with your phone. You don't need a laptop. You don't need an iPad. You don't with your phone. With so long as there's internet connection on your phone, that is all you need. So everybody can have access to the stock exchange market. Literally everybody. All right. So let's go ahead. Let's go ahead. What is shares? What is stock? All right, shares and stock are basically the same thing, but they are just a slight difference. There's just a slight difference between shares and stock. What is shares and what is stock? Is that okay? So shares is a unit of ownership in a company. A unit of ownership in a company. How will I define this? How will I describe this for you so you understand? Let's assume um let me use the most popular example that I've often seen and heard. Um let's say a piece of cake now is divided into four parts, and each part is worth 100,000 naira. All right, so if I pay 100,000 naira, I have a piece of the cake. Although they are not going to share it, the piece of cake is still one cake. Is that okay? It's still one cake. Nobody is dividing it. It's just there. But I just know that since I paid 100,000 naira, I have one part of the four parts of the cake. Is that understandable? Yes, yes. So it's a piece of ownership, a unit of ownership in a company. Let's say we use Dangote company as an example, Dangote group of companies as an example. Um, what we will find is that it sells its shares, and any amount of share I buy, I become part of the owners of the company. That's the idea. That's the idea. So you can buy shares with, so long as those companies are listed in the Nigerian Stock Exchange, for Nigeria, you can buy shares with so as much as you can afford, as much as you want. All right. So you can buy shares with Nigeria, MTN Nigeria. You can buy shares with Airtel. You can buy shares with Dangote Cement, Dangote Sugar, Flour Mill. So many companies. So many companies. All right. So it's a unit. Once you buy it, it's indicative of the fact that you are now part of the owners of this company. Is that clear? Good. So let's move forward. Stock is ownership of shares in multiple companies. Yes. So the difference now, shares and stocks. Shares and stocks. Now, shares is in one particular company. When you buy shares with one particular company, you have shares with that company. But if it's in multiple company, let's say you have shares with Dangote Cement, you have shares with Boa Cement, you have shares with MTN Nigeria. So the combination of more than one company's shares that you have is known as stocks. Is that clear? I think that's very, very understandable. All right. So having shares in Dangote company makes you a part of the owners of the company. I've explained that. All right. It makes you a part of the owner. It makes you a part of the owner. So let's move forward. More about stocks. More about stocks. Some crucial things that we need to know when it has to do with stocks. When it has to do with, remember, we said stock is in multiple companies. All right. So companies request for money from the public by offering their shares for sale. Companies request for money from the public by offering their shares for sale. So what company basically do is that they want to expand, they want to grow. And you know, when any business wants to expand, it needs funds, it needs financial aid, it needs money. So how do the company get this money? Is that they offer their shares for sale to the general public. All right, they offer their shares for sale to the general public. So the general public buy their shares. All right. But so the general public buy their shares with money, send the company money, all right, and then receive the shares. And how will I put it now? Through a broker, yes, through a broker. And then the company has more money in its hands to actually expand its business. And then the public, the general public now has the company's shares. Is that okay? Don't worry. If you don't capture this in further explanation, you will get it. Don't worry. All right. So the first time a company offers its shares for sale is known as IPO, initial public offering. All right, initial public offering. Now, when we talk about IPO, it actually entails the first, let's assume the inception of a company, the beginning phase of a particular company. Most of these times, the company are not even known. That's the first time it lists its shares for sale. All right, they are not actually as popular. They are not. At that point in time, it's a very, very risky investment because the company can just crash. The company can go down. Yes, it's a very, very risky investment. So those first time, they are not actually the time where um, the general public, all right, have complete access to. Actually, most of these IPO are actually done by by all this how will I put it now? By most wealthy class, the wealthy class, the bourgeoisies. All right, they are the one who gain access to these IPOs and then the initial public offering and then they buy it. All right. So it's still the same idea. So let's move forward. Once you buy a company shares, this number three now. Okay, yes, number three. Once you buy a company's shares, you automatically become a shareholder in that company. That means you are part of the owners of the company and you have the rights to dividends. All right. Now, there is something after this IPO. I will explain it in the next slide. Is that okay? But let's take a look at this now. You have right, you become part of the owner. I've explained that before. You become part of the owners of the company and then you have rights to dividend. I'll be explaining dividend. Dividend is when the company, okay, remember we said when you buy shares, you are giving the company money so that they can expand their business. So when they expand their business, the profit they make from the expansion of that business, all right, they will share the profit with shareholders. That profit that gets to you, that gets to the shareholders, is known as dividend. All right, I'll still explain it further, so don't worry. Let's move forward. Let's move forward. Now, the stock market. The stock market is a highly organized institution for the buying and selling of shares. All right, so you see, just as we've explained, I want to buy shares now. I can't buy it anywhere. I can't buy it in the usual market. I buy it in the stock market. All right, so anybody that wants to buy shares has to do it in the stock market. Is that okay? So it's not just anyhow kind of market. It's highly organized. Highly organized. All right, highly organized. Like in Nigeria now, we have the Nigerian Stock Exchange. We have the Nigerian Stock Exchange, which is the stock market, the official stock market for the buying and selling of Nigerian shares. Is that okay? So let's go to number two. Companies sell shares in the stock market to raise money and expand their company. Is that okay? So we've explained that before. So the reason why they sell their shares is so that they can have more money, so that they can expand their company. And that expansion means more profit, it means more sales, it means more workers, it means a lot of things. And it means, yes, it also means more profit. And then that profit is what they are looking for. Once they have that profit, they will be able to keep some for themselves and they'll be able to share some with the shareholders. All right. So, number three, investors like you and I buy shares of companies that are listed in the stock exchange market. Good. So this is where we actually buy and sell. This is where our 1K can actually be profitable in the buying and selling of shares. All right. So we can buy shares in the stock exchange market, this particular highly organized market. All right. So we can buy shares, we can sell shares with as low as 1,000 naira. All right. So we are actually investors. Yes, investors doesn't have to be someone who is investing 10 million or 50 million or 100 million. Yes, with 1,000 naira, you are an investor. All right. Is that okay? So let's move forward. Types of stock market. Now we have the two type of stock market. This is where the IPO comes in again. Yeah, this is where we have to explain the IPO, known as the initial public offering. All right. So the first one is the primary market. All right, the primary market. This is where a company first lists its shares through initial public offering. Yes, that IPO that we spoke about, the first time the company lists its shares, all right, through initial public offering, IPO, all right. So it's actually carried out in the primary market. All right, every company must have an IPO, must have an initial public offering through the primary market before it gets to the next market. All right, let's go forward. It says it is the early stage of the company where huge startup is required. So you don't have to, you don't, sorry, you can't invest 1, 2, 3, 5, 10, 20, 50K in the primary market because it's where startups are actually found. Initial public offering don't take um, little funds. All right, they don't take little funds. They are strictly for large funds because it has to do with the startup of a particular company or the beginning expansion of that particular company. So let's move forward. The secondary market, this is where our interest is based. All right, the secondary market, this is where investors like you and I who wants to invest with little capital can send our money to work for us by buying and selling of shares from as low as 1,000 naira, 1K. We can buy and sell shares any day, anytime within the trading hours. All right. So this is where you and I actually buy and sell shares. All right. So this is where we can send our money to work for us. It is done in the secondary market. It is done in the secondary market. All right. So any day, anytime. Now, within the trading hours, the Nigerian Stock Exchange trade every work day. That's from Monday to Friday between 10 a.m. to 2:30 p.m. Between 10 a.m. to 2:30 p.m. So the Nigerian Stock Exchange is active within this hour. So at any time between Monday and Friday, 10 a.m. to 2:30 p.m., you can buy shares at any of those times. Is that okay? Yes. All right. So basically, the primary market is for initial public offering, IPO, while the secondary market is where we can buy and sell. So long as it is listed in the secondary market, we can buy it at any time. We can sell it at any time within the trading hours. Is that okay? So basically for this class, that will be all. I will see you in the next class where we'll be talking about how to make money from the stock exchange. Is that okay? So for now, just I hope you've jotted a couple of things about this class. I want you to actually go through them, go through what you've jotted, and then ensure that you have a clear and accurate understanding. If you don't understand anything, go through it again. Ask questions, please. Right? Ensure you have a clear and accurate understanding, because every other thing we are going to be doing is going to be built on the definitions that we've established in this particular class. We've said so much, and I want you to go through them, please. All right. So I'll see you in my next class. For now, do have a beautiful day. God bless you.